Hey, friends. I'm Zack from CoinDesk. Thanks for being here today. We're going to try to keep this fun, lively, maybe spice it up a little bit. Should be fun. We're talking about expanding the crypto investor universe. And I think we have some really nice perspectives on this panel, both from the world of crypto itself and the world of fintech, as they explore products that make sense for their customers. So we're going to go down the line, quick intro, say who you are, where you're from, and what's your favorite animal?
Oh, wow. That's a new one.
It's a new one.
Jalak, Jobanputra. I'm founder and managing partner of Future Perfect Ventures. It's a fund I launched in 2014 to invest in decentralized tech. We are now investing out of our third fund and do seed investing. We were early in blockchain.com, Blockstream, Abra, BitPesa, The Graph, Dot, and many others. And oh gosh, favorite animal, elephants.
Nailed it. Slava?
My name is Slava. I'm one of the founders of Vincent. With Vincent.com, we're democratizing access to alternative investments. So we have the largest database of alts on the internet, over 150 partners, over $5 billion of deal volume at any time, and have like 50,000 registered investors and 400,000 users that have used it. So my favorite animal is a rhino.
Hi, I'm Michael Weisz. I'm a co-founder at Yieldstreet. Yieldstreet is the largest direct-to-consumer private market investment platform, and we are helping the retail investor build a diversified portfolio of private market investments. And my favorite animal, I'd say, is my 3 kids.
Nice.
Rishi, Khanna, CEO of Stocktwits. Stocktwits is one of the largest social media platforms for retail investors and traders. And we recently launched trading as well directly right on the platform. And my favorite animal, I'm going to go with the turtle.
Solid.
Steve Ehrlich, co-founder and CEO of Voyager Digital. Voyager is a publicly traded company, a cryptocurrency platform for US traders and investors with over 1.2 million funded accounts and over 5 billion of customer assets on the platform. And my favorite animal is the cheetah because I like things going fast.
Nice. For the record, my favorite animal is the gibbon, the long-armed monkey that swings from tree to tree. That's what I got. All right, let's talk about some crypto stuff, though. So I think, again, we have some really nice perspectives on this panel. And I kind of want to probe our title, Expanding the Crypto Investor Universe. Why is this even a problem? This is something that has been around for over a decade. We still have conversations on panels like this as to how we prod this thing into more growth. Still, a pretty small sliver of the world has access to crypto, and it's always interesting to think about ways that that pie can be grown. So I want to really start with my fintech crew, which I sort of see as being in here. As you guys roll out crypto products, what are you hearing from customers as it relates to pain points? Why haven't they been here sooner? And when you talk to them, what are they saying? I'm going to start with Slava, and then feel free to jump in.
Sure. So people are coming to Vincent to search, and they're looking across the entire internet at what their options are. And I would say that, to summarize, I think the 3 issues of why this panel has this title is, 1, crypto people sell too hard to crypto people, and that's a very small market. And I think we need to figure out how to sell beyond crypto. It's kind of like saying in the public markets, hey, are you into like small cap stocks from Idaho? Yeah, let's like really try to sell those really hard to people who only like small cap stocks in Idaho. We should really try to be going after mainstream, and I think that it doesn't happen enough. So that's 1. Number 2, I think that there's a UI issue, a user interface issue for selling crypto, both from the security of it, the seed phrases, the having to hold it in hot wallets or cold wallets, or whether it's just whether it's an ETF or not, how you actually access it, how safe it is or not, and that needs to be solved. I kind of think about it, I'm aging myself like Telnet versus like AOL Instant Messenger versus WhatsApp. Like that's just a UI issue to me. And then number 3 is definitely like we try too hard often to sell crypto as crypto, but really it should be in a broader allocation strategy. And too often people don't want to talk about any one asset in itself. They want to think about it in their allocation of their net worth. And I think that is an important way to expand how people get into crypto, which references back to number 1 as well.
I like those. I think that I could expand a little there. I think, one, it's part of normal market adoption, right? So crypto is still new, and we need to continue to educate people a little bit more on why crypto should be part of portfolio allocation, like Slava said. Two is, here at Yieldstreet, I like to say that I've 400,000 users that were responsible to help them think through portfolio allocation and what the future of their portfolio looks like. It's not just stocks and bonds anymore. It's public product, it's private market investing, and it's crypto. And so every time you open one door, there's 8 behind them. And crypto's really complicated to understand where to place those bets. And people don't feel like they have the time or the ability to get educated and make the right investments. And the convexity and the likes of Bitcoin and Ether and some others have gone beyond, what they're looking for. They want to find the next one. And so they get lost, okay? And the third is the folks who are actively investing in crypto and NFTs and more broadly in this market are very technologically savvy. They're willing to sign up to multiple different platforms and trade fiat for Ether and Ether for some other coin and start moving around. The typical person, the typical retail, the typical consumer has a job, they're busy, they're not as technologically advanced, they don't know where to go, and they want things to be easier for them. So what we've done at Yieldstreet is said, hey, we're not going to be smarter than some of the people you're meeting or listening to here at this conference. The right way for us to provide crypto investments to a broader audience is to partner with some of the bigger players. And so we've done things with Pantera and Osprey and some other big platforms that we could talk about, but it goes to the UI. It's about making it easier. It's finding the right investment. It's educating people on why crypto should be part of your portfolio and doing it for them in a way that's trusted. To us, that's the only way you're going to cross the chasm of getting real adoption of crypto mainstream. And you need it.
Jalak, I want to put you on the spot here, actually, because I think, you hear some of these pain points often. And I want, from your perspective, as someone who's been in the space since 2014, is it the same pain points that you've been hearing all these years, or has the narrative around what is stopping people from entering the space changing in meaningful ways?
Yeah, my perspective is there's so many more people who are engaged in this sector than there were in 2014, and we've made a lot of progress. Even though it looks slow from the rest of the world, it's still a small percentage of the world that actually has a crypto wallet. Yeah, it used to be, you had to go in, and if you wanted to accumulate any significant position in Bitcoin, it would have to be, through many days and weeks of accumulation. You don't have to do that anymore. There are more exchanges, there are more OTC desks, there are prime brokerages. So there's a lot of infrastructure, even from the institutional standpoint, that exists that did not exist back then. And the regulation has also become clearer. It's certainly not clear, but it's a lot clearer than it was in 2014, which kept a lot of institutions away. Now, for individuals, I would say 2020 was a major turning point, as it was for institutions, in that people were home. They were exploring different types of assets. We've seen it through the equity investment platforms too, and so there's become more familiarity with the asset class and how to buy it. However, we are still not in a seamless environment. People are still worried about losing their assets. They're, especially with NFTs now, with all the phishing scams. So I think the industry, and that's what we're actively investing in, is how do we make this more seamless, more usable? Compare it to the internet. It was very clunky to use the internet. Most people would rather use a phone than send an email in 1994, 1995. Now everyone uses email. So we're going to get to that point. But there's a lot of infrastructure build out that needs to happen for that.
Yeah. Steve, similarly, you've been in it for a while, so I kind of want to put that same question toward you.
Yeah, I think I have been in this for a while. I was early guy at E-Trade in 1999, so I've seen this. I've seen the adoption of online brokerage. And the things we're talking about now are the same conversations we had in 1999 and 2000, where how do you get more people into online brokerage? Like, do you trust the internet? Do you trust sending your money, a check somewhere? Remember, there was no ACH systems or anything like that in 99. So you would send a written application to Sacramento, California for E-Trade with a check and hope it actually got through. And not until checks cleared a week, until 10 days later, you were crossing your fingers, and so you had to get that adoption. But I think when you think about where this industry is, one of the things I think that holds it back and that we've all got to do a better job in this industry, the apps are there to make it easy. Our app makes it easy. You can open an account, get funded, KYC, 3 minutes or less, fund your account, trade. It's education. I think we're all playing too much on FOMO. The ads that you see, the marketing that gets done is all about FOMO. FOMO is not going to win the general person over. We've got to educate them as to why this industry, why blockchain matters, why a lot of the layer 1 protocols matter. And if you start educating that way, we'll get more adoption. Just the FOMO is not going to work. It's going to be short-lived, and you need to get people to understand that you're actually changing technology for the next 20 years. And I'll finish with one other thing on that. In 1998, Oracle did a great Super Bowl commercial, iconic Super Bowl commercial, where they talked about a technology revolution. And they were going to be the ones that changed the way we do business through their products. And they called it a technology revolution. If you take any of the other layer 1 protocols today, Solana, Hedera, Algo, Avalanche, doesn't matter. Put that in Oracle and take out the R and make it an evolution. That's what we have to teach. That's what we have to educate, because this technology will change the next 20 years. But if we keep trying to sell FOMO, it's not going to work. We got to sell education.
Yeah, and I want to expand on that because we look at it the same way as how do we educate our community, which is historically been very equities biased. And we actually did a survey this week just to check, and of our community, 40% still don't own any crypto, and 50% of that 40% said they never will invest, right? And so the question is, why is that? And I think a lot of that is about education, and we take a very community-based approach, but we also there's teaching them about different, blockchains, different protocols, and, where the value is over time. But I think it also comes to the multi-asset class approach where you can't, I think over time you can't make it feel like so different and so scary compared to equities or options or, traditional asset classes. And that's why we take a very multi-asset class approach with our community. And hey, how do we make the tools just as easy? You can buy, a stock just as easily as Bitcoin, and, and you want to be also careful about maybe what coins and tokens, right? Because there's a lot of volatility in the long tail of that. And so leveraging the community, leveraging our 6 million plus members to learn from each other and learn from your kind of public facing profiles and stuff is a different way that we're trying to tackle that same educational kind of perspective.
Nice. I like the granularity of that data. So thank you for pulling that. Appreciate it. Michael, I want to zoom out a little bit, right? I want to talk about this sort of generational moment that we find ourselves in. Where crypto obviously exists in a world of many other asset options out there. What's the big picture? Give me a 30,000-foot view in the markets more generally, and where crypto fits in now, and obviously where it might fit in the future.
So I think that's a great topic to jump on, and it's well positioned on the heels of education. And so zooming out, you got a couple of really big macro trends that I think are important to pay attention to. So one is you have $70 trillion moving from baby boomers to the next generation. And we don't behave the same way our parents did. And so we're not going to go for a round of golf with a 70-year-old super overweight advisor telling us why some bond fund is the place to invest. And so at Yieldstreet, we've been thinking a lot about the future consumer and how that consumer is going to interact with his or her portfolio. And when you think about that, you also have to ask yourself, the way in which most of us were educated was a function of a public portfolio, right? And the portfolio was designed to give us passive income and asset appreciation. Some call it 60-40, some look at it from that perspective. At the end of the day, public product alone is not solving for wealth creation. And we continue to have an issue in the US and globally around having a wider and wider gap between the have and have-nots. And the way in which we at Yieldstreet believe you could solve it is really to help people make more money. So how do you do that, right? So now let's take a look at the institutional investors and their allocation. So pensions and endowments have moved up to 40 to 50% of their money in private market investments. Why aren't we? If all the smart money is moving there and people who are paid fortunes to make decisions on portfolio allocation are moving to private markets, why is retail still 95% invested in public product? And the reason historically had been some of the similar situations that we're talking about crypto now, maybe when we started our business 7 years ago. And so we believe at Yieldstreet by 2025, you're going to see close to 40-50% of a person's portfolio in private markets. So I'd like to see a world where you have 50% public product, 40% private markets, and about 10% crypto and emerging for now, 5+ years. And how do you get there? So number one, education is key, right? You're fighting headlines for 100 years around public markets. A consumer goes into Shake Shack, enjoys a burger, goes and buys stock. Balance sheet, I don't know. Revenue, who knows? Margins, what? And so there's this emotional connection that's created through either an experience with a product or through a headline. So at Yieldstreet, we need to continue, like you guys were just talking about, focusing on education. What is private market investments? What is crypto? How is this going to make a difference? Why is it important to be in your portfolio? Step one. Step two, you got to make it really easy to invest. So think about things like Vanguard. Think about things like ETFs in the past that have brought tremendous flow of capital once it was easy to invest. So we need to think about making and creating model portfolios for private market product. And then you got to have liquidity, which is an issue in part of the private markets, in some of crypto, not all over, but you're solving that with chain, you're solving that with tokenization, we're solving that with expansion of regulation in our favor over time. Too slow, agreed, but it's coming. And you got to have a lot more trust. And so when you put those four ingredients together, I think in 5 years, that's how you start to see the retail portfolio completely and dynamically changing to 50-40-10. And I think that, for us, that's how we communicate it.
Yeah, no, and I think to that asset allocation question, right? What are the right numbers? You know, I don't know what they end up being, but I think the vehicles and a little bit of the regulatory conversation, right? Like, I live in New York State. I can't trade crypto on my own platform because of our lovely friends at DFS. You know, so there are still a lot of regulatory burdens against crypto. You know, but we're seeing slow change and trust and adoption coming from the bigger institutions. You know, we were just talking backstage, the Fidelity announcement of allowing Bitcoin in your 401ks. That's a big deal, right? I mean, a lot of people have their assets via retirement accounts and retirement funds. How do we unlock and give those accounts access to all the asset classes that we do have access to, whether it's alternatives, whether it's crypto, whether it's, you know, whatever, you know, NFTs, whatever might come next. So I think the on-ramps to access and putting your capital somewhere, right? Because the long-tail users don't have the, you know, $50 billion pension fund portfolios. They have $500, $1,000, you know, $5,000. And how do we unlock that? How do we help you educate to learn that you can do that? And those kinds of tools are available or are becoming available. And then how do you build the trust, right? Like,
I also think as an industry, we need to think about what type of products do you want to be used as part of major adoption, right? Like solving for edge cases and meme coins and altcoins and coins that are fraught with, you know, litigation or other issues are not the ones that we should be thinking about helping us cross that chasm and making crypto mainstream. I think it's like an index, right? Yeah. Investing alongside some of the biggest investors in blockchain, Web3, new technologies, in potentially in ETF or other solutions. Let's try to solve for like the 80% of the population and really bring crypto more appropriately into portfolios and a little bit less on maybe the individual edge cases or some of the smaller allocations.
I think the headline that you mentioned about crypto being put into retirement accounts is a perfect example of a UI change. And I think that UI will have a significant effect in the days and weeks and years to come because most people don't actually think about their investments every day or think about their trading 24 hours a day. In the public markets, they've solved for this, which is in the public markets, like over 90% of the money is actually passively managed by somebody else. And the people that are investing that money think about dinner, vacation, and where they're going to go, you know, next week for lunch. And that's not what's really happening in crypto. Crypto, you have to know the right woman or the right guy at the right time to do the right trade, to bottom tick or whatever, and like maybe you're going to do it yourself, and which exchange are you going to do it? And it's the exact opposite. In the private markets, it's over 90% actively managed that you have to manage it as opposed to passively hand it off somewhere. And there's a lot of opportunity, and regularly our investors are asking for a better interface, a better way to navigate that in not having to make all their own choices. So we have our own proprietary data where, you know, hundreds of thousands of folks are searching. So we can actually tell you that our data shows that 50% of the searches for alts, and when I say alts, I mean real estate, venture, debt, crypto, art, and collectibles. We simplify the world into those 6 categories. 50% of it is going to the two behemoths, which is venture and real estate, about 25% each to simplify it. Then debt has a little bit, and then you basically go a third for the remaining 45 between art, collectibles, and crypto. It's been really interesting to see crypto rise and fall as basically the risk-on versus risk-off markets. But what's interesting there is already 50% is into this stuff that most people think is tiny, meaning crypto, collectibles, and art and NFTs. There's already that demand, and that demand, as you were saying, generationally, is going to keep on shifting forward. So it's really about figuring out how to provide the UI, which is the vehicles, as you mentioned. What are going to be the regulatory infrastructures? What are going to be the products? Who's going to be advising you? How are you going to get into this without having to hand pick and choose each of these different things? Because in the public markets, that's not what most of the people in this room do, and that's not what most people in America or on Earth do, which is they don't try to pick, is this the right token? Is this the right airdrop to get? Should I get into this whitelist? That's not actually what happens. That's actually why I think the market is so small, because going back to my Idaho example, we're just selling to each other. We're like, oh, you want to get into this whitelist? We're not trying to figure out how to bring in 10x or 100x more of the mainstream people that don't actually care about those details, but do want the exposure.
I want to rewind and zoom in on the regulation question, because I think it contributes to sort of the headwinds that people face when they consider entering the crypto markets. Hey, is this stuff legal? Am I going to get in trouble? Voyager is a little bit in the hot seat with some state securities regulators over a product that's been increasingly under the microscope at other companies as well, sort of the yield product, right? State securities regulators are saying, hey, it looks like a security to me. I don't think you guys should be doing that. Companies in the space disagree, and I want to, ask you for more details on that situation first of all, and again, how those questions relate to this big question of what's holding people back from jumping in.
Yeah, well, first and foremost, they're not securities. I don't believe they are. There are 9 out of every 10 lawyers will say that. They're not securities. And what really bothers me is two things on that front. One is you've got hyperinflation of 8%. So if you come to my platform and you get 9% on USDC, which is, Jeremy's here, it's backed dollar for dollar, it's a stable coin, no risk, and you earn 9%, you're basically treading water, right? The dollar you made a year ago is worth the same today. And regulators are saying, well, wait a second, maybe that shouldn't be offered. So what they're telling their constituents is you should be worse off a year from now because we're not letting you, tread water. And you know what happens when all of a sudden people's disposable income and the amount that they can go to the store and spend decreases. That means those stores can't hire enough employees. They got to fire employees, which means we get into this spiraling recession because now there's not enough disposable income in there. So it really should be something that should be embraced rather than pushed back on because everywhere else around the world, you can earn those yields. So are we allowing the rest of the world to be better off than our own residents and citizens of the U.S.? That's one. Two is, every state has to go to the federal government and get money. They're always asking for money. And so now you have a product that allows people to earn some rewards, some yield, and it becomes taxable. What do states love more than anything else? Taxable income. So don't you solve a couple of problems with this rather than trying to cause another problem? So to us, again, we don't think they're securities. 9 out of 10 lawyers will say these aren't securities. That's yet to be fought through. It's never been tested in the courts yet. We'll see what happens on that front. But I do believe that these products are what people want. And when we come out, we're launching our debit card. It's all based on USDC. When you think about adoption, the ability to use a USDC stablecoin every day and swipe using that's going to help adoption. And I think the regulatory environment will start coming along here. I think there will be thoughtful regulation. It's going to be painful, and there's going to be bumps along the way, though.
Jalak, I want to put you on the spot here because I think venture capital firms have really sort of taken the lead in the education effort on the regulatory side. There's a lot of conversations in DC that are, hey, how can we sort of educate the regulatory class about what these things are, what they're not, how they might work in a compliant legal framework. Like, from where you sit, how are those conversations evolving, and what are you seeing in terms of progress on the regulatory side?
I mean, I've seen a lot of progress. if you just look at Biden's executive order, you listen to Janet Yellen's comments, I think people who haven't been following this space for a while may say, oh, it's a big nothing burger. But it is a lot of progress to say that, we believe that this sector is here to stay, that we want to encourage innovation. These are the most obvious things I would hope the government would say, but that's very different than, again, even 5 years ago. And if I look globally, and we have been investing globally, and the whole reason I got into the crypto space in 2013 was I was born in Kenya. I've spent a lot of time in the emerging markets. I just saw right away the need for a self-sovereign currency. And then started thinking about all the ways that this underlying blockchain technology could be used, through microtransactions, through ownership mechanisms. So everything that we're seeing played out was part of our thesis in 2013 and 2014. And I can say, every country back then wanted to ban Bitcoin. Maybe not North Korea, but other than that. And so what we've seen in the evolution in places like India that have gone back and forth, and the Supreme Court overruled a ban on banks banking crypto companies. And then we've seen Polygon, one of the largest cryptos, come out of India. We've actually seen any country that has tried to ban it, there actually more innovation happening. So India moved to a peer-to-peer model when that happened. And so DeFi, I believe, took off because of the amount of governments that wanted to kind of ban more centralized exchanges. So I think regulators around the world have seen that happen and realized that there is no, banning this. They can regulate it, they can tax it, which is what they're all, trying to do, and they are learning. Now I think it's incumbent on the industry, though, to self-regulate and make sure that we don't allow bad actors to proliferate, because that's just going to set us back in terms of having more positive regulation in the sector. So I think we've made a lot of progress in terms of educating regulators, and now we have to make sure that we stay engaged, and also showcase the use cases that are emerging. We're an investor in a company called Brain Trust. We invested in 2018, and they were one of the first use cases outside of the financial industry using blockchain technology, building a freelancer network using crypto economics. And I just ran into Adam yesterday here, one of the founders, and they've just been growing exponentially. And so, when freelancers can participate, when large companies can participate, more money goes into the pockets of freelancers. I mean, that's a positive use case that I can't imagine anyone would be against, any regulator or government would be against.
So jumping to my TradFi guys, I guess specifically Rishi, right? Like as companies in the world of traditional finance add crypto products, was it a big regulatory headache on your end to do that? You're integrating a crypto trading platform into your company now. Was that like, a big regulatory headache, or is the hand-wringing on that front overblown in your opinion?
It's getting easier, I will say that. I think, crypto in a standalone world, because of the lack of regulations right now, the lack of clarity, in a standalone universe, it's actually not particularly difficult when you find the right partners. Like, we partner with FTX. Like, we haven't built our own exchanges, our own infrastructure like others. So in that sense, it's when you start bringing it into the world of TradFi as well, right? So we have a broker-dealer. We are, launching equities on. Now, FINRA gets involved, the SEC gets involved. Like, I was with my lawyers for an hour yesterday talking about, how to respond to some FINRA requests for yesterday. And so, that's, I think, where regulatory clarity of who owns the regulations, right? Like, is it right now the SEC and Gensler or CFTC? And, they're still figuring those pieces out. But ultimately, as those things get flushed out, and they will, right? Whether it happens in 6 months, 12 months, 18 months, I don't know that, but it will. I think that'll become a lot easier. There's a lot of great infrastructure and partnerships being built, which ultimately get us back to that trust thing, right? Because to kind of a little bit of what Jalak was saying, definitely to the UX UI point that Slava and stuff have said here. When you can trust the system, when you don't have to worry about managing self-custodied wallets and losing all your money potentially, that type of infrastructure that you can trust. Whether it's the packaging, right? Whenever we get ETFs and stuff in crypto and indices and things, that all comes together, but a lot of those pieces require the regulatory frameworks to be put in place and committed to, but it is getting easier, right? And for us, the hardest things right now, the challenging things we deal with, as I'm sure Steve is familiar and a couple of these guys, AML and, we have to have closed wallets because we have a broker-dealer, right? We can't just, kind of let people move their money around. And most regular users actually don't care. They don't want to.
I'd say my perspective is there's much to celebrate, right? So I've been in regulated businesses my entire career. So there's two separate things. One is like reality check. Regulators are not the smartest people in the room. They never will be, because those who are ultimately generally go private, right? So it's never leading, it's always reactionary. So if you're an entrepreneur in this space, you're a participant in the space, you need to embrace the regulators that you're going to work with, and you're educating the regulators the same way you're educating your consumers. And I think that in the business world, especially in newer industries, we, as a community, don't often respect that component. We just expect them to adopt to what we say. And they're never going to be as quick as us. And you need to deal with that and live with that, right? And so even if you think about what Yieldstreet did, we started 7 years ago. We're the first platform to ever digitally distribute private market investments. And I remember our first exam by the SEC. We registered with the SEC in 2015. I think less than a year later, they were in the office, which is pretty mind-boggling if you're in a regulated business. It took about 6 months for the first exam, and the first 3.5, 4 months was pure education. So I think we've come a long way. I think there's actually much better tailwinds supporting crypto than there are in a whole lot of other much more mature areas for bringing more favorable regulation. It's a populist asset. People want it, so they're moving in the right direction. I would say it depends how you're interacting with crypto. So we don't have a trading platform, but we offer investments linked to crypto. So yesterday we announced an index in partnership with Osprey, where it's going to be a top 5 coin index. So giving people exposure to Bitcoin, Ether, and 3 other coins, not top 10, because we think that is actually taking out too much convexity. We have a partnership with Pantera, where we've gotten access to retail investors and early stage tokens. And in the next couple of weeks, you're going to hear about a number of other pretty marquee names. And then we're launching Invest with Crypto, so you can actually transfer your crypto wallets over to Yieldstreet and invest, call it 50,000, 5,000, whatever your number is, into a KKR fund or a Pantera fund using crypto. We haven't had any issues there. And to be very frank, we haven't sort of shared this publicly yet, but of all the funds that we've launched, from KKR, Apollo, Fortress, Ares, every exciting fund, the crypto funds are actually selling fastest than any other product. So it's showing that the traditional investor wants that access, wants that asset, and they're taking it down quickly. It just needs to be given to them in the right frame. And I think if we don't try to do things too cute, the regulators are generally going to be okay with that if you're working within the framework of a security offering, if it is, or appropriately regulated offering.
Yeah, I mean, I think, the accredited world, though, is a little bit different than the smaller retail world, right? Which is where I think there's the growth and the opportunity at much larger scale globally, not even just in the U.S., right?
But again, in our 40 Act fund, it's non-accredited, and I think you're seeing 40 Act, right? Like we were talking about earlier, having the right wrapper and the right infrastructure. And listen, we're not there yet. We all want the regulators to move much faster. But I think there's still a lot to celebrate over the last couple of years.
I mean, just to give some perspective.
Yeah, go ahead, Slava.
I mean, just to give some perspective, so my first company was Indiegogo, and Indiegogo has a lot of regulations to navigate, whether it was doing crowdfunding traditionally, to passing the Jobs Act with the Obama administration, to working directly with the SEC, FINRA, and Congressman McHenry, who I had on my podcast, helped pass all these things. That got signed 10 years ago. And we're only now starting to see some real serious momentum in equity crowdfunding. And crypto was barely born 10 years ago. So we got to have a little bit of perspective as to how fast things are moving. So I would say things are moving very rapidly, but absolutely regulations needs to be clarified. There's a saying, which is if you want to go fast, go alone. If you want to go far, go together. And if you want to just change that saying for regulations, like if you want to make some wealth for yourself, like, go around regulations. If you actually want to make a scalable institution that's going to make tons of money for a lot of people, it's going to be regulated correctly. And there's people in the room or at this conference that are definitely made wealth, but potentially it's in a way that can't be scaled as an organization. And that's all fine and good. But I think the people on this panel are trying to create like iconic organizations that everybody in America or the world will interact with. And you can't kind of go around or hack your way to that. So a year here or a year there might feel like eternities in crypto land, but it's actually not that long in regulation, like in world time. And I would just agree for like the 97th time, for anybody who wasn't in this room, it's all about the wrappers, which is, you even said it yourself just now, which is you have a crypto fund that all of a sudden people, that's the number one thing that people are working with, because I would say because of your packaging, right? And that's the UI, that's the user interface experience that most people are afraid of navigating this on their own. Or if they're not afraid, they don't have the time, the energy, the minimums, the whatever. This all needs to be evolved into the way it is in the public markets, which is just a lot of great wrappers. And soon we'll be there with Bitcoin and crypto and all that stuff. And I think that is all going to be built out. And hopefully, people will no longer be trying to market to the people that like crypto. They'll be marketing to the people who have no idea about it and show where it should fit in your market allocation.
Yeah, the one thing I would say on regulation is executive order came out a month ago, right? And it basically said, hey, all these government agencies get together and figure it out. It's a step, but it clearly shows that regulation as it sits today is unclear. And unclear regulation is also one of the reasons we can't get major adoption. When the EO and everyone puts their reports in, which won't happen until November, and we'll probably even have a change in the government at some, in that election, that's going to make, then we'll start to hopefully see some change come from there.
I think your point about FOMO is a really good point, right? And Novogratz said something interesting yesterday. What do you think the total size of the crypto universe is versus total assets? It's 40 bips, right? So we're trying to attract as much regulatory horsepower as we can to pay attention to 40 bips in the market.
Yep.
And we're doing that primarily through FOMO. That's really how we've gotten this out. It's a tremendous amount of venture money, a tremendous amount of capital supporting just the ecosystem as a whole and really people. And we're trying not to pay attention to really educating around fundamentals like you were saying. And I think that when you look at it from that perspective and say, hey, it's only 40 bips of the total assets in the market, and we're trying to command 100% of the regulatory attention, it's going to be a problem.
That's it. I mean, you have to take the time. It's incumbent upon all of us in the industry, everyone here, to educate people the right way and not to just push it through FOMO. You can't. It's not going to grow to where that number that's much greater through FOMO.
I think what you'll see a lot more, and this is like, I have 3 kids, so a simple metaphor, but my kids don't always want to have their spinach, but they love it in a smoothie. My point is not everybody needs to be forced fed crypto and buying tokens like right down the front into their account in the face. Like all these wrappers are going to be created and all these smoothies are going to be available, and all of a sudden that number is going to go up from 40 bips to 11%. You'd be like, well, how did that happen? Well, just every day you got a little bit more in your smoothie, and before you know it, it's a pretty huge market. And that smoothie is, again, the 98th version of the wrapper. There just needs to be a lot of that, and that's what we see on Vincent every day. Our customers asking us for more education, simplification. We're an objective platform. We don't actually sell you a specific thing. We're just trying to show you all your options. And regularly, they're trying to figure out what's my easiest way to get these exposures is the consistent feedback.
Solid conversation. We're going to have to leave it there. Lots to watch in the coming months. Join me in thanking our panel, and we will exit stage right. Thanks.